Cool.
Let's get it in. Alright.
Step aside.
Check it. Peace to everybody who's joined. We're gonna get properly into this because I'm not sure how much longer I got. Might have a little bit. I might have to switch over to my phone. As you can see, I got this live right now, jumping from my desktop. So let's jump into it. Thank you for joining. I appreciate you taking the time out. I really do. It helps me out big time. Make sure that you share with your friends, with your family, if you want to know how to use tech analysis in order to find great stock setups, because that's what I do. So just a little intro on me. My name is Dwayne, aka Extro. I run a podcast called Stocks and Bars. I run a website called wincrease.com. And then I also do market recaps every single week on YouTube. So change your life. Make sure that you sign up for all of those channels. My YouTube is Wincrease Team. Obviously, here's Wincrease Team. Twitter, all of that, Wincrease Team. So check that out. So that's enough about me. I started probably about 15, 16 years ago learning how to trade. Obviously lost a whole bunch of money. Everybody's been in that boat before, and I learned how to use my smarts in order to get into these books, take the knowledge out of it and apply it. And what I want to do is help anybody that's having trouble in the market learn how to overcome that trouble. So let's get into it. Now, before I jump any further into it, I want to make sure I give a shout out to my fellas, Marathon Money Plus. You can see got the logos jumping right there. That's MN Plus. Sign up, Marathon Money Plus. They give you all their stock tips there. And then Marathon Money, the regular podcast. Make sure you check that out every single week. All right. Enough shameless plugs. Let's get into it. All right. So if you're not familiar, make sure you check out the YouTube channel. Recently, I just put on there what I call the win picks. And each one of those picks are picks that I do all the research and look for the best stock setups. And what I'm going to do is show you what I do in order to find these. So let's check it out. First off, what do we got here? That's my video in the middle there. All right, let's go to the very first one. And that is Skyworks. All right, and that's SKW. There we go. SWKS. All right. On the video, it was about 105 or so, right? Now we're sitting around 108.78. Let me turn it down a little bit. This is what I do. First and foremost, you want to zoom all the way out. All right. You definitely want to zoom all the way out because you want the most data that you can find on the chart. This right here happens to be a 2-hour chart. I don't want this. I want my maximum chart. Anytime you look at a stock, I want you to get familiar with looking at it from the perspective of a bird's eye view. You want to be able to see the entire landscape of what price action this stock has done. And the reason why you want to do that is because you want to determine if it has an uptrend or a downtrend. If it has an uptrend, obviously, you want to get involved. You know what? I just realized all that time I was probably talking and you probably didn't hear a word I just said. So anyway, now we're into it, right? You want to determine that it's an uptrend or a downtrend. Bird's eye view. Take a look overall at what the stock is doing. And in this case, in Skyworks, we're looking at a 20-year monthly chart. So we see that it has some very good action going up, and recently has come back down. All right. I like this. And why do I like this? I like this because now it is showing that does it have the strength to continue to hold itself up? If it does, I want part of that. I want in, I want my cut of this money that is about to happen. Now that we've got the price check going on around this $90 area, we have proven that it is holding up. So this is a great price to enter into. And this is what I typically do for any stock. I determine what that support is, and in this case, it's around $90. And that's what I pointed out in the video too. $90 is a great price. Anywhere close to that price is good too. On top of that, now we're sitting around 108 or so. I'm okay with that. How I determine my risk is I look at what that support is. It's $90, okay? There's my floor. I would love to buy it absolutely $90. If I don't get it $90, I'm not fretting it. I'm going to make sure I get as close to that price as possible. Now at 108.78, here's how I determine my risk. $90, 108. That is an $18 gap, okay? Am I comfortable with losing $18 to try to get into this? That's going to obviously depend on your risk. Me personally, no, I'm not comfortable at that. I want to get as close to 90 as possible. I'm also a cheapskate. But besides the fact of that, I definitely want to try to get as close to that $90 as possible. I'd be willing to get in at 100 and start averaging down from there. That's me. Again, your risk is going to always depend on what you want to spend. So back to Skyworks. How did I determine that I want to get into this? 20-year chart, number one. Number two, where is the support? We determine it at 90. Number three, do we have the chance to start moving higher? Here's how I determine that. I have three indicators that I use for all of my stocks. And that is the MACD, the stochastic, and the RSI. If you're not familiar with those three indicators, get familiar. If you want to use them, go ahead and use them. They're not for everybody. Everybody has their favorite indicator. I will say that the RSI is probably very, very popular amongst all technical analysts, and any other trader that uses technical analysis will show you that RSI is probably something that they use. So I use all three. And I use a combination of all three in order to give me what I call the trifecta. All right, check this out. The trifecta is when all three are oversold at the same time. So whenever I have all three of these indicators oversold at the same exact time, I'm giving myself a high probability chance that this stock price is going to likely move up. Now let's check out the chart and see if I can find any other scenario where I had the trifecta. Trifecta don't happen all the time, fellas. Now check this. I'm going back all the way to 2013. All right, 2013 is a situation where the RSI was oversold. Stochastic was somewhat oversold. So just for the sake of consistency, I'm not going to include this one. But here, back in 2012, we have the RSI oversold. We have the stochastic oversold, and the MACD you can't really tell because the price action at that point in time compared to now is not the same. As you can see, there's a lot more volatility. So these two are now oversold. Did the price move up? 1, 2, and then we see here, price did move up. Anytime you look at indicators, back test, all right? Back testing is a key element to helping you understand how any stock moves, okay? You'll get familiar with any stock that's on your list and you will get used to how it moves. You definitely want to back test any strategy you have to see, did it work? Why didn't it work? Why it did work? And that's going to give you confidence in order to how to use it for future instances. So I did all of this on 7 stocks. Make sure you check that video out on YouTube. Subscribe to the YouTube channel, Wincrease Team. That's Skyworks, and that's an example of what I did to find the great setups in order to give you the inside lane on what to do. So that's Skyworks. The next one that I had on there was Wayfair. Let's check that one out. When I posted this, it was around $50 or so. Now it's at $69.48. So when you check this out, you see that I have a very similar setup. Support tested out around 40. Oversold MACD, oversold stochastic, oversold RSI. Check, check, and check. All of these give me the signals that, yo, this stock has the potential to start to move higher. So that's Wayfair. Then I also did the same for Netflix. Some of y'all probably hate Netflix. But I'm not here in order to be right or wrong. I'm here to make money. You can get an argument with me all you want. You arguing with yourself. Netflix is $241.15. When I posted this, it was around $210, $208, something like that. But you can check the video. Now it has moved higher. We've got similar setups once again. Oversold MACD, oversold stochastic, and oversold RSI. This is my favorite trifecta setup. Remember, trifecta, trifecta, trifecta. You leave this Instagram live or wherever you see it at, understanding that the trifecta is in full effect. This is what I look for, especially on a monthly chart. 20-year monthly chart, oversold RSI, MACD, stochastic, those three. And if I'm at support, even better. That gives me a great signal for entry and also sets me up for success for a move higher. Your best defense for any stock is the price you buy it at. All right, and let's get into that. Now, looking at Netflix, we see a lot of activity here, right? First thing we want to do, obviously, is identify that support. Okay, support currently was sitting around, let's say, 150 or so. All right, at 150 would have been my best entry. I see a lot of activity with it not really respecting any other price other than 150. So it makes zero sense for me to buy at those other prices because likely the price will move back and forth above or below it. I want to try to get as close to that 150 as possible. If I miss the 150, then the next thing I want to do is find what's the next best target. I want to find the next support. So we're above 150. So where's the current support at? The candles are showing that right around 250 is the resistance. If the stock price gets above 250, which I think it will, that is your next best entry. If you missed 150, but obviously you want to try to get as close to 250 as possible. If it starts to move lower, you take the risk and get in now at 241. If it starts to move lower, what do? You always position yourself, size position yourself for that particular move. Because in technical analysis, the key thing that I tell everybody is you know nothing except for the stock is going to move. The price is going to move. That's all that you know. You don't know where. All you know is that it will move. Your technical analysis will give you your key to what direction it could potentially move, but there's always two sides to that coin. And you don't know what side it will go to. You have probabilities that can help you, but ultimately you don't know a thing. I happen to be good at it only because I understand that right there, that I know nothing. I approach every single chart with the mindset that I don't know a thing. It's a blank scale or slate, and that I'm looking to see what can potentially happen. If I'm siding to the upside, I'm going to look to position myself that way. If I see it for the downside, I'm going to do the same thing. But ultimately, remember, I know nothing. And I have to always be prepared for the other side of the trade to happen. So either way the market goes, you got to be ready. Got to be ready. Because ain't no fair ones out here, I'm telling you. So that's Netflix. On the win picks, the next one I have on here is Disney. We're covering this one. When I covered this one on the win picks, it was close to 200. I think it was sub 200 or so. Now it's at 122.81. Earnings came out. They had a monster beat as far as subscribers for Disney Plus, all of that. But you know what? Miss me with all the news stuff. That's great, but I look at the chart. Y'all say I'm crazy? Yeah, I am. I don't look anything at news. The chart tells me everything I need to know. I knew it was at around 90. The price told me multiple times 1, 2, 3, 4, 5, 6. I'll even count these, even 7, 8. All of the times it hit around $90. That thing jumped. That's all I needed to know. All that Disney Plus stuff and all that, that's cool. All that's going to come into play anyway. All I need to know is that 90 is my buy. So now we're above 90. What's the next greatest price that we can get into or support? That's around 120. We're currently above 120, 122.81. What I tend to do for technical analysis is I want proof. I want the proof. The money's got to prove it to me that it's worth my time. That's how you need to approach the situation. Is it worth my time? At 122.81, I want this to close above 120 in order to show me that consistency that it's ready to keep going. So patience. Patience. That's something a lot of us don't have, especially with the stock market. Everybody wants that thing to jump. I've fallen victim to it many a times, but you got to be patient because you will put yourself in a position of failure if you're not patient when it comes to the stock game. So Disney, what do you do now? If you're not in, do you want to get in now? You take the risk, okay? 120 is a support. We're currently above by about almost $3. Do I get in? I scale. Remember, position sizing. Buy a little bit. 5, maybe 10% tops. Matter of fact, I wouldn't say 10. 5%. We'll do that. Maybe 1 or 2. Okay? Scaling at this point. If it starts to take off, then you can start adding on to it there. But control your risk. You do not want to over leverage yourself. Put too much money into one pot because it can burn you. That's Disney. I covered another one on here. This is stock number 5, I believe. All right? It's IBM. So IBM, I believe, was around like 140 or so. And it's actually still pretty flat. 120, I think it was. Anyway, check the video. Now IBM is still around 140 or so. And it's still performing okay. Let's zoom in. Because when I looked at this, I was looking at the upward momentum that we currently have. And we are respecting that 20-day moving average. We need to close above 140. I love it above 140 because then you can see sky's the limit. We have gone as high as 206. I think once we get above 140, we can continue to move higher. Let me check on here just to look at and see what we got for the chat. Yeah. Peace to Marcus. What's good? D-Tone, what up? Sample God, what up? Alright. Okay. Now, let me answer one question on here. Hold on, Sugar, you want to say hi? You say hi. And then everybody, this is Sugar. Say hi, Sugar. Just say hi.
Hi.
Alright. Go ahead and tell your sister, or do what you got to do with your sister. Alright. Let's see. Disney. Do I think gap filler at 111? I think Disney's off to the races. I think Disney's going to take off. Personally, I think the market itself is going to probably continue to take off. Disney's going to be part of that takeoff. And just looking at the chart itself, it looks like everything is oversold and things are going to try its best to move higher. I don't think anything is going to stop the market right now. Interest rates are too low right now. I'll get into all that. But basically, I think the market is going to continue to move higher. We can cover that at the end. All right. IBM, I just covered that one. Let's jump on over to the next one that I covered, which was Salesforce. Salesforce. All right. I don't remember what price I said on this one. I truly don't. But it's at 187.96. Key component. Look at every single one of these that I posted on here, and you see similarities between them all. They all jumped. They all have a very good uptrend, very strong. They came down recently, started to test out their strength. I love when stocks test out their strength because they can't keep going up higher without getting chin checked. Got tapped. Now all of a sudden, it's at the floor. Is it going to get back up? That's always the trick. Will it? Because this is where the scared money don't make money. You got to be ready to pick it up. A lot of people, when the market started moving lower, started running away because they thought the market was going to keep going lower. We've had war, recession, all this stuff happening, a lot of talks, just to scare you out of your money. Now all of a sudden the market started to rebound. I was one of the very few people who said, yo, the market's ready to start getting that thing going again. The engine was revving and it started taking off. I still think it will keep going.